Hey guys, welcome back to Financial Markets. Hope you're all doing well. So just before we begin, I have to do a quick plug. At the top of my description, I've given my cash tag and a link to the Cash App. So any donations on Cash App will be very, very appreciated. I obviously do this for free and trying to give advice and give back to the retail community space, but naturally it costs me a lot of time and money. So any help, any donations will definitely be appreciated to keep this channel ongoing. And so yeah, let's begin with the video. So, for those of you that have been watching, I have been making a lot of content around where I think the market's heading and about the recessionary side of things and how things are slowly falling into place. And I think so. The beauty is that this week, well, the last week that we had really good declines. Well, obviously because I'm short, and we were down around. From peak now we're down about 2.5%, and at the lowest point we were down about 4%. And so the cool thing is that right now the technicals are quite good for a good short. So if we just have a look at the moving averages as well, it'd be a good idea to get that up on the screen. But basically, the reason why the markets are starting to decline a little bit is because there's China and Trump trade tensions still ongoing. And the cool thing is that for those of you that have been actually following markets, you know that they were never gone. It's just that he became muted, Donald Trump, and the reason why he became muted is because he knew that he wanted to get the market to sort of come back from its really lows that we had in Q4 of 2018. And so because of that, he naturally kept those things a little bit muted. But that being said, as soon as the markets have now starting to hit close to all new highs, he's now gone in and basically disrupted the markets again. And the reason why he's done it, obviously he hasn't done it to disrupt the markets, but he's done it because he knows he doesn't mind the markets to sell off a little bit and when it says all-time highs. And the reason being is so he can get on with what he believes he wants to do, and that is to actually get the China and US trade negotiations done. But that being said, I think because of the way the two countries are, a trade war might not be the best best terminology for it, but it will be ongoing. I think because they're both in a situation where they don't want to give in, and so it's important. I think I have to just get this up again 1 second. So I think it's important for both the nations to do what's right for their country. And so naturally it's going to cause some tensions and some more problems in the coming months. And I think those will again jitter into the markets as they already have been doing. But I think the worst thing is that people are not realizing is that when the Federal Reserve said it's not raising interest rates and it paused on the tightening cycle, why do you think that is? If they're claiming, which they did do, is that the economy is doing so good and we're so happy with it, but yet they're not raising interest rates, it doesn't sound about right? Because naturally if a country is doing good, they want to start raising a few interest rates, and so that way they have some room for bringing them down when a recession happens, because that's what you do, right? Your monetary policies are bringing down the interest rate when recession happens, because you want to start putting stimulus back into the economy. But clearly they're now thinking of a rate cut. So in that case, one, they think they're gone too ahead of themselves, and second, they want to, they're preparing maybe for a recession themselves. Technically, that what other measures would you get from that conversation? And so it's really good and interesting point right now. And like I said, that because we're only 3% down from its all-time highs, it's such a great risk reward for me personally right now. That I just don't see a point in not shorting. I think I can get in a short, small position to begin with, and as it keeps working for me, keep adding, and my stop loss is 3% above. So if you think about it, if the market tanks and if it is a recession, you get a 30% decline, and your stop loss is at 3%, so your risk reward is 1 to 10. So for every $1 of risk you're taking, you're you could be getting $10 back in profits, and so it just to me seems a no-brainer. And so that's why I think recessionary looms are still really gleaming. Again, it might still take 2 years to play out, but it's definitely a really good position, in my opinion, where we're in now in terms of as a short person who's shorting right now. And so it will be really interesting to see how volatile the coming weeks are, because I think this will pretty much cement whether or not we're going to go back to all-time highs or not, or we're going to go down and collapse pretty much by the end of the year. But yeah, hope you guys enjoyed this video, and I'll see you guys in the next one. Bye.